What's up, guys, and welcome to our RSI video. Okay, RSI Relative Strength Index. Now, excuse me. So, Relative Strength Index, it is a very commonly used tool, and I think that some get the wrong idea when it comes to the RSI. Okay, the RSI is merely a indication, all right, of possible reversal buying or possible reversal selling. All right. But you can also use it in figuring out your continuation. All right. And today I'm going to explain exactly how you're going to use RSI to be able to do that. Okay. So straight off the bat, let us add our RSI to the chart. So you go to your indicators, RSI, RSI, it's your relative strength index. Now, strength of what? Strength of the trend. All right, strength of the trend. You can also use it to figure out overbought or oversold conditions. All right. So I just want to get rid. It comes with a standard MA. I don't really want to use that. I just want to change it up a bit. I want solid lines for my 70, solid for my 50, and solid for my 30, so we can see it clearly, and we'll get rid of the background fill. Okay, good. So you can see here we have our 70 line there, 30 line there, and our 50 line at the middle. So generally when price, or shall I say when the RSI is above 70, it kind of indicates overbought conditions. Overbought meaning there has been too much of buying happening, we're due for some selling action. All right. And when price is below or near the 30, it means that price is oversold, we're due for some buying action soon. All right. But you can't just go off that. Okay. But you can see how kind of accurate it is already, because you can see here that price, as it came down to the 30 line on the RSI, suddenly price started pushing up. Okay. And RSI as well. All right. RSI will react first, by the way. RSI will react first. Okay. Here on the opposite end, we can see that you had some stalling there. Price was near the 70 line, and then we had some selling take place after that. So pretty simple to see for yourself. Yeah, so pretty simple to see for yourself, right? So that is your overbought condition above 70, oversold below 30, and then the 50 line is not talked about enough, because your standard RSI that comes on your MT5 mobile and things like that does not have the 50 line there as standard. You have to add it, okay? So the 50 line for me represents liquidity. Liquidity. What do I mean by that? Very, very good question. So I mean that when price is between the 70 and 50 and staying in there, I already know by looking at the RSI that we were in an uptrend, right? That we were in an uptrend, the momentum was up because it is not coming below the 50 line. And every time price came to the 50, there was a continuation. Boom. See? Boom. Well, that actually is there. This one is here. But can you see? Buy, continuation, buy, continuation, buy, continuation. Okay? Very, very simple. Very, very simple. Here as well. Here's your 50 buy continuation there. There's a 50. Close to the 50, close to the 50, close to the 50. You see? So anytime price, if it's above 70 and price comes back to the 50, and you know already we're in a uptrend, when it comes to the 50, just wait for a rejection and you can put a continuation buy there. Just by using the RSI. Why? Because 50 is liquidity. See, liquidity grab there, liquidity grab there, liquidity grab there. liquidity, liquidity, liquidity. You see, not many know about that. Not many know about the 50 line on the RSI and how important it is to spot liquidity after the grab to plot your continuation entry. Okay, very good. So, guys, in a downtrend, the opposite is true. All right, the opposite is true. And I'm looking for a good downtrend to show you what I'm talking about. What I'm talking about. Okay, this is not a very good example, but I guess I can show you. Okay, so you can see we were in a downtrend there. Price was trending down, 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 down. All right, and then here price oversold, it bought a bit, and then it came back, rejected there and fell. Okay, and you can see here just above the 50 line. This was a good liquidity grab there, rejection. You see, and then it stayed below. You see, it stayed below there. Price come back there, boom, sell. All right, very small sell, but as an example, I'm not saying you would have taken that sell. That would have been silly to do that. That would have been silly. But here's a good example. Okay, here you can see prices staying below the RSI there. It's not even going near the 70. We're in a downtrend. So every time price comes back up there, boom, sell. Back up to the 50 line, boom, sell. All right, very, very good. Very, very good. Here we had a reversal there, and you can see to my next point, very good example. You can see what we have here is bullish divergence, where price made a lower low, but RSI made a higher low. And you can see how strong, what a strong signal that was. Boom. And we stayed above. And every time price came to the 50, boom, re-enter. You can add to your positions. You can add to your positions. You see? Every time price came and touched the 50 line, you can add. Very simple, guys, very simple. So that is bullish divergence there. And then I want to show you a bearish divergence case, if I can find one. If I can find one. That's not a good case. It's too steep. Too steep there. Here's a case. You can see here, price made a higher high, but RSI made a lower high. And then you had this little sell. You had this little sell that happened here. It seems small, but if we had to measure in terms of pips, I'm sure it would have been at least 200 pips on that. Okay. So bearish divergence. As a matter of fact, that divergence there would have actually set up for this bigger sell here if you were patient. Okay, if you are patient, because you can see here as well, there is a even bigger divergence happening there. See? So the RSI actually shows you what's happening behind the scenes. It's a peek behind the curtain of market. It's a peek behind the curtain because ultimately we use trends to make money in market. And we know that market at times is manipulated. I'm just showing you here. How come the RSI made a lower high, but price made a higher high? Higher high is bullish structure. How can RSI make a lower high? It doesn't make any sense because that is a peek behind the curtain. Market makers want you to think that price is going to continue pushing up for a long time, and then suddenly, boom, we have a hard fall. We have a hard fall. You see? So very, 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 very simple. And I'll show you yet again that RSI reacts first. RSI makes structure first. You see, here we have price made a lower low, right? But look at RSI, higher low. See, there and there. Boom. And then right after that, we had a liquidity sweep, and then shoop, a big move to the upside. A big move to the upside. See how simple? A little telltale. This is a tail. That's a tail. Divergence. 5-minute divergence to get that sniper entry. Very, 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 very neat trick to have in your bag. Okay. So this is a good way of using RSI. Now, another good way is to some of you like to use trend lines, all right? Some of you like to use trend line. As an example, here we have a bullish trend line. Okay, we have a bullish trend line there like that, like that. All right, very, very good. Or you could have even taken it here like this. Some would draw it like that. To me, it doesn't really matter, all right, because we're not going off the trend line on its own, all right? We will be looking at the RSI. Now, in order for us to sell here, what do we need? We need price to start making lower highs and lower lows, all right? But we need RSI to show us that first and to show us that the bullish trend is fading. So number one, we need RSI to be above 70. Check. We need RSI to start making lower highs or equal highs. Check. All right. And then we need a candle close below our trend line. Check. We would enter there. Boom. Stop loss above the high. Target anyway, previous low there. That's what, 1 to 1.3. Come down a bit more. There. You'd have got almost a 1 to 2. But in terms of entry, very, very good. If your stop loss was just above there as well, the last little swing high there, then your look at your risk to reward 1 to 3. Right? 1 to 3. Which is an excellent, excellent trade. And all you used was RSI and a trend line break. Trend line on its own will not work most of the time. Trend line on its own would not work most of the time. You need to couple it with something. And using RSI to do that is a very, very, very good tool. All right. So this was a bullish trend line break scenario. I want to show you a bearish trend line break scenario. All right. And we have one right here. So here price was pushing down. So 1 touch, 2 touch, extend the line. All right. Very, very good. Right. And you can see RSI as well was pushing down, down, down. Right. And then here we have some same lows, equal lows. And then on the RSI, we have, what do we have? We have higher low. Okay. We had a break there as well. Break and then close below. If you didn't want to take that one, it's fine. You could have waited for this engulfing candle to come in there. Very good. RSI is pushing up. It's making higher lows and higher highs. It's broken over the 50 line. Very good. You can open a long after the bullish engulfing. Stop loss just below there. Take profit. Previous highs. 1 to 3. You see. Very simple, very simple. So that is how you use RSI with a trend line to time your entry, So you're not just going on a whim, all right? So in this scenario, price is coming down, it's oversold. So we can expect a move to the upside. Wait for a trend line break, RSI making higher highs, higher lows. And that's it. Very, very simple, very, very simple. So you can use this now. You can see here, there was a buy setup and a sell setup. All right, and a sell setup. 2 moves for the day, you sorted. I can show you this whole day, Somewhere here you will see as well. There's it there. You see, you got a buy there. Here you can call a sell. See, RSI overbought, equal highs, boom. Very, very simple, guys. So that is how you use your RSI to time your entry. So if you have like a 30-minute fib zone, right, and price comes back up, retraces back into that zone, you can just use this. Draw a 5-minute trend line, wait for RSI to be oversold or overbought, and you can get in. The fib zone would add even more confluence because it's higher time frame. You see, you can catch a really big move and you can use this as entry. All right. Very, very simple, guys. So, guys, that concludes my RSI video. I hope it's going to make some difference to your life. Very, very simple. And guys, we use the trends to generate profit. RSI is showing you the strength of it. If you can see when one side is fading and the other side is taking over, that is your optimum entry. That is your optimum entry. And for those that use fair value gaps, you will see that when price is pulling back into a fair value gap and you're going to buy, RSI will be at the 50 line. Okay? You can test that out for yourself. But that's it from me, guys. Hope this helps. All the best. Take it easy. Peace.